Hello everybody, welcome back. Let's have a look at the charts. We'll start with the Dixie to bore you to death first, and we'll move on to Bitcoin, which is just as boring as anything else, to be honest with you. So prepared to be bored. Don't know why anyone tunes in, really. To be fair, what I would really like is if you're not already subscribed, just subscribe to this channel, alright? I do make a lot of accurate calls, and according to the people on my Telegram, I'm like their preferred YouTuber. So again, I can't compare myself to anybody else because I don't watch them. But yeah, I would really appreciate some more subscribers. All right, right. So let's get started then. So Dixie finally having a bit more of a pullback yesterday. We this is a daily chart. So we hit the 200 exponential once again. That's basically a death cross retest. So we're pushing back down again. We got bought back up on the 21 exponential, and we're still floating around. So basically, what we're seeing is a symmetrical triangle, maybe an ascending triangle. It depends on which way you want to look at it. Two time frames battling against each other. The daily is bearish, which offers larger moves down. The 4 hourly is bullish, which is offering a potential trend reversal. You might say, oh, we've been up for a while. So, I mean, this could just be considered a bounce until now. This may be even beginning to be an uptrend. We'll see. It's all about the 4 hourly holding above this area, 102.9, basically 103 really. And we did get bought back up from there. So it's not a nothing. The 50 exponential hit it this time. Golden cross retest, V-shaped recovery, and then some. But then the breakdown took place. We're still getting bought back up, but we've not gone on to make a new local high. So the Dixie is neither here nor there. We've got bullish on the 4 hourly. We're bearish on the daily. We just want to see which way it's gonna hold. And again, bullish would be invalidations with closures on a 4 hourly below 102.9. I would say really. Super bullish below 102.5, and again, bearish, sorry, and bullish obviously would be continuation to make a new local high. So we'll see how that goes. You might think, why is he talking about the Dixie, man? Well, the Dixie is important. At this moment in time where crypto and Bitcoin and everybody else is teetering on the verge of coming down further, you do need to basically have every weapon in your arsenal to try and dictate some kind of move, up or down. And at the moment, it's quite clear that Bitcoin's trend is down. We've not really had any convincing reversal signs, not yet. In fact, we're just basically showing continuation of the downtrend. And we might not even see any major bounce until we hit that 37,700 or thereabouts. And I would easily say that is a likely possibility, which is a further 5, almost 6% move, really. Currently on Bitcoin, then, we're seeing rejection on that 21 exponential moving average. So this is all pretty standard in a downtrend, really. Excuse me, since we lost all these areas all the way over here, all happened nice and quick on the ETF situation. Big move down below all major moving averages. We did have a decent enough bounce to hit the 200, but since then it's the 21, it's the 21, 21, 21, 21, boosh, up to the 20, 21, 21, 21, 21, 21, boosh. And what we're doing now, so we're hitting the 20, the 21, the 21, the 21. Are we going to be looking for a boosh, or are we going to break out? Let's have a look at momentum to see if we can find out any reason why we should get bullish on this one, to be honest with you. So MACD is below the 0 point, and to be fair, it is diverging, and it's getting closer and closer to the 0 point, but I mean, it's still quite a long way off. And as we are already hitting resistance, this might be the peak, and we'll be looking for the histogram to start tailing off once again and taking another nosedive towards that 37,700. Remember, I keep saying we've not even heard a single shred of FUD yet. If I was BlackRock and I have an ETF and I've got customers who want to be exposed to Bitcoin and they're skeptical about the whole thing, they don't want to expose themselves to too much risk, and now I've got a relatively decent amount of control, not just on the financial side of things, but to be fair, also through the media. BlackRock effectively rule the world in many ways, don't they? So if they want to FUD, they can FUD. It doesn't have to be through them directly, but they've got the influence to do it. We've not heard a scrap of it yet, so we've not heard anything. In fact, I can still hear the echoes of people being quite bullish in the short term on crypto, in the hope that it's going to return all the way up to its previous high. Now, even though that is a chance, I think it seems quite unlikely. But yeah, it just seems like a recipe for further disaster. And me, my strategy on this one was to sell around here and sell pretty much everything. I do have a Bitcoin bot that I opened up on this drop, which I'm hoping will stay profitable. I mean, it is at the moment. But I am not exposed to this market much at all. 90% in cash. Probably more than that, but roughly, give or take, 90% in cash. The rest of that cash is going to be deployed later on down the line, because what we're looking at now is a downtrend, and it's a downtrend that's going to take place for a little while, to be honest with you. So we haven't got a short signal. We haven't got any of that. We'd still be bullish if Bitcoin came down to 35,400 or 33,700. All these areas still technically bullish, but I just don't see how and why we should be turning around on this chart yet, to be honest with you. I just don't see it. It's not present on the chart. There's no bullish divergence. There's only continuation. It's weak, it's weak, it's weak. 4 hourly is getting a rejection at the moment on that Bollinger Band and the 21. So I still think that the main strategy, the overall strategy that I've been saying since, I suppose, November, certainly throughout December and into January, definitely, which was to profit take any kind of move up. And as soon as we hit 48,000, sell the lot and wait for brighter days. Brighter days are going to be presented in the form of absolute despair across the crypto market. Much lower prices across the board. People calling it scams and blah blah blah. BlackRock ruined it. Nya. And then you know what? Just like it was, back down at these lower levels, when people were saying, "Oh my God, never get in crypto." Absolutely not. Remember, the majority of people hold the wrong view, right? And that's fine. In crypto more than anything, because crypto has been so accessible that there's lots of captain noob masters out there, and they don't necessarily have to be new to the market. And no disrespect, we're all new to something once. But when it comes to trading, when it comes to investing as well, when it comes to trying to break down a chart, you also have to think about the sentiment too. Where's the money coming from? It normally comes from the retailers, right? And it goes into the pockets of the big institutions or the major players, the whales, all that sort of thing. And most of the time, the majority of people are wrong, right? That is the nature of it. They have to be wrong, otherwise people can't take their money, and that's how it goes. One of the easiest ways to recognize this is a money flow index, which I've been saying the whole time, right? Every time the money flow index reaches a peak, a peak, a peak, a peak, every time it reaches a peak, this is one way to think about people's money. So you're filling up a bath with cash, right? Everyone's chucking money into the bath. Oh, yeah, put it into the bath. Oh, fill it right to the brim. And then, who's going to take it out? The bath gets emptied and into someone's pockets. So when the money flow index is at its all-time highs, or certainly into the 90s on a weekly, the bath is full. If somebody wants to take big portions of cash out of that bath, this is the time to do it. Because this is when the bath is getting full. You can't take large portions of cash out of the market when it's down on its knees like this. You just can't, because the cash isn't there, basically. You can't. There's no point in draining the bathwater of cash when there's no cash in it. You wait till it's full. And then when it's full, you drain it. And that's what's happened. Now it's going to have to drain. And I expect it to drain at least down towards the center point here, towards 50, on a weekly. So this can bounce up and down and up and down and up and down. That's fine. We can even stay above this level for a period of months while the money flow index trickles back down again. But this was an overheated read, as was this, and as was this. So we are looking at a consolidation that will take months, I reckon. And that's just pretty standard stuff. Retailers losing out again because they felt compelled to keep putting money into a market which was unfortunately overheated. That's the nature of it. Now, we can see serious bounces, and obviously altcoins will bounce massively when the time is right, and it will still be consistent with a downtrend. We all know this, but some people might not, and this is why I think you should subscribe to the channel, join the Telegram, join the Patreon, right? Crypto is slightly different to other markets, but kind of the same in many ways as something like a penny stock. It's an illiquid market, so if there's really sort of a chart that's trading for peanuts, right? Its 24-hour trading volume is small. It doesn't take much money to go into that to make an enormous, massive green candle, like a penny stock, like a shitcoin. That's the nature of the way that these things work. And same again, when somebody wants to take a large portion out of that and redeem it in cash or tether or whatever, it comes down quickly because it's illiquid. So this is why crypto moves up and down so dramatically, is because it's illiquid. There's just not the sort of money in there to hold higher prices. As soon as people start selling, it comes down massively. As soon as people start buying, it goes up massively. And so that is the beauty of it. It's also the danger. And if we want to see something go up, and we want to see it go up for a prolonged period of time, you do need to see it on a weekly where we've basically more or less reset. You want to be looking for bullish divergence on a money flow index. 2 drives is all you need. 1, 2, bang, all the way up. Again, over here, consolidation after 2019's bull market beginnings. Low, higher low, marking the absolute low, all the way up to the top. So, that's the nature of it, really. This is what we're kind of looking at. And so what we really want to see to try and navigate an absolute bottom for Bitcoin, which should also correspond to the overall market, would be the same kind of reads. Bullish divergence from a lower zones on the money flow index on the weekly is one really good way to try and spot that. And at the moment, we've only just started to dig back down into the comfort zone. We've got a long way to go. Now, that doesn't mean we're going to find our way down into the mid-20s or even break down below into the teens. It doesn't mean that. It doesn't mean we shouldn't rule it out. Remember, there's not been a single scrap of FUD. If you want to destroy Bitcoin's price so you can pick it up from significant lows so you can please your client base in the ETF, then of course, you're going to do whatever it takes to drive the market down. This market bounces back quick. This is not a chart that gives up easily. You could bring this all the way back down to 20 if you wanted to, or even into the teens, and it will recover very quickly, especially when BlackRock are buying the hell out of it, which is what they might be doing, from those lower zones. Remember, they've got the power to do it. They've got the facility now to do it. Why wouldn't they do it? So remember all of that, right? Remember all of that. When you're looking at this chart, and I get messages, DMs all the time on the Telegram saying, I'm looking to trade, some obscure coin. What would be a good entry point for me now? And what would be a good exit point for me now? And I'm like, well, no offense, but right now the market is particularly unstable, right? Bitcoin and Ethereum to an extent are driving the market. They are not really showing any signs of strength, and whatever they do, everything else is going to do. You might think you've got a good setup on an altcoin, but you really don't if Bitcoin and Ethereum decide that they're going to come down further, and these are the ones that are driving the market. So if you want to look at some obscure coin, that's fine, but you really need to think about what it is that you're doing here. You're trying to build a house while an earthquake is taking place. It's not a great idea. Do you know what I mean? It's going to be very difficult. I can't say you can't do it, but the chances of success is different. If you were to build on steady ground where there's no earthquakes happening, you have a good chance of building a house. If the ground beneath you is shaking and crumbling, it's going to be pretty hard to build that house. The same tools, you'll be trying to use to build that house, but it's still, for some reason, it's not working. The ground's shaking beneath you. That's what's going on. So I'm just trying to put it to you now that sometimes the market is better to look at as a whole, right? As a giant, one big monster, right? There'll be altcoins that pop here and there. That's fine. You can try that if you want to, or you can look at the overall trading environment, which is currently not very pleasant. Which is why I was adamant of selling everything here. And now it's just a matter of waiting for it to go down. There will come times, just like there was in the bear market, when we did the Everything Bounce Part 1, we did the Everything Bounce Part 2, and the Everything Bounce Part 3. In a bear market across the board for stocks, commodities, crypto, the lot, we were able to do some giant swing trades during that 18-month period because there were signs of life. There aren't currently any signs of life, unfortunately. The next main event that I'll be looking for would be when we start to move into 37,700. That kind of area should be enough to give us a significant bounce, possibly back up towards 42 and maybe a bit above, maybe towards 44. But right now, there's not really enough evidence to say that anything is going to happen. And I don't really want to risk too much, if anything at all, on this market. The main analysis remains the same as it was throughout November, December, And January, which was to sell here and allow for this market to find its way down to a low which I feel is acceptable to consider close enough to a bottom so we can then enjoy the next portion of the bull market, which is more than likely going to lead into parabolic phases. So this is where Bitcoin reaches a new all-time high. This is where altcoins go absolutely berserk. And that's not going to be for a little while. It might be towards the end of this year. It's more likely going to be some point next year. But the way that you make that serious cash is to not overtrade environments like this. And is to wait, comfortably wait, patiently, until we come all the way down to wherever it might be at the time. And again, it could be mid-30s, lower 30s, mid-20s, lower 20s, could even dig its way back into the teens. I find it I'd be surprised if it did, but I was also surprised when it did before. I didn't think it would do that, but it did. It could do it again, believe me. It could. It definitely could. I'm not saying that it will, I'm just saying right now we have to accept that a downtrend is in the making. And the downtrend is far from ending, and we should just sit back and let it downtrend. And if we play an everything bounce, which I'm sure we'll get the opportunity to do that, maybe at least once, we'll do that. But until then, just sit on your hands. Relax. There's no point in trading spot trades on a market which show no real opportunities for major reversals. Set up some bots, that's fine. That's cool. Or if you're not able to trade, which is fine. Everybody's got their things. I'm sure you can do loads of things better than me. I can trade, that's fine, but I can't even change a bloody tire on my car. Do you know what I mean? So we've all got our own things that we do on a day-to-day basis. We're not all going to be traders. I'm assuming that if you're watching me on YouTube, you're not a trader and you're trying to get some, I suppose, not financial advice, because that's not what this is, but you're trying to understand the market a little bit better. You're learning, which is, that's great. But, I'm telling you, for somebody that has traded markets for years and years, that I don't like this trading environment. Obviously I've more or less bought the bottom, I've more or less sold the top, and now I'm looking to find where the next bottom is going to be for what will be a major swing that will fulfill to serious gains over probably a 12-month period, which is really not much at all. So we're waiting for this downtrend to complete. The next buys will be epic trades, which will lead to significant highs. We're talking hundreds of percent at this point, and that's what we should do. Don't get caught in this portion of the market. Moving from here to 42 is nothing when we could be moving from 30 to 100,000 or whatever. That is the real move. That's the move that I'm interested in. It should be the move that you're interested in. And if you're unable to trade, if you don't have the capacity, the time, the skills, or the knowledge yet, then just try not to do it, because what you're doing really is kind of gambling. There's going to be lots of YouTubers and tweets out there that are all going to make you feel bullish. But this does not feel bullish to me. This looks like the start of a downtrend which is going to take place over several months at least. As I was saying, all the way through December into January. And now we're starting to see that. Some people might be in disbelief. I'm not. And if we do bounce, and continue up further, I don't mind that either. The reason for that is that we will start to at least find ourselves in a healthy trading environment which allows for opportunities. The earthquake at least will have finished and we can start to build houses again. But right now there's a bloody earthquake. Stay away from the charts, I'd say. Keep your ear to the ground. Be patient. Downtrends like this can take a while. This one went up straight away within a 4, 5, 6 month period, and then down for a 6-month period. Normally, that's the way consolidations go. They mimic the time it took for it to go up. Now, this one has been going up for over 12 months. So this is why I think this consolidation will take a while to play out. And this is why I don't think we're going to get any major opportunities for scraping significant lows until the end of the summer. I could be wrong on that one. And again, when you're looking at a chart like this early on, it's difficult to at least speculate where the low will be and how long it's going to take, because it's all about momentum. And there's always people saying, when and where exactly is the low, which is a fine question, but no one knows. And the only way I will find out will be when it actually happens, in hindsight. But there will be clues to when it's happening based on momentum change. Most likely on a higher term time frame, like the weekly. Right, hopefully that made sense. But again, there will be bounces down the line, and I think we should be looking for a bounce soon. But whether or not you feel like you have the capacity, the time, the skills, the patience, the balls, the risk management to play these bounces in a downtrend is a different story. You have to really ask yourself the question, am I prepared to try and trade these things, which are going to be difficult, or should I wait it out longer to see how low it's going to go over a prolonged period of time? What is my preference? What is it that I want to do? And I've told you quite clearly that my preference is mostly to wait. There's nothing wrong with taking 10% of my cash and making some trades of these, but as for the 90%, stays in cash for brighter days, for better opportunities much later on down the line, because it's those bids, those buys, those limit orders getting filled from the lower zones that will make the serious cash later on down the line. So this is just a reiteration of my previous videos, pretty much the same as what I've been saying since November, December, and especially January. There's no reason for my analysis to change. It's been the same the whole time. It remains the same. It is the same. It'll stay the same until something shows me that there's a reason to change my analysis, and at the moment there's not. We're already down on Bitcoin from the peak, which, like I say, I basically sold. We're currently down 17%. We were down at 1.20%. We're likely to come down more. Just tune into Sanity FM and recognize what it is that we're seeing here, and just be patient. Be patient. Right, hopefully I'll see you on the live streams or the Telegram, something like that. Links in the description below. Otherwise, I hope you have a nice day and take it easy.